Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of big business. And today we're diving into something that might sound a bit dry, but trust me, it has got some juicy details about how much a real estate investment trust is worth. Today we are looking at Hines Global Income Trust Incorporated latest filings. They are telling us how much their shares are worth right now, and it might surprise you how they figured that out. We are going to break down their transaction price, what affects it, and what the underlying real estate is doing. So, businesses like Hines Global are always reminding us that they have plans for reinvesting money and buying back shares. When you are part of their distribution reinvestment plan, any money they pay out to you gets used to buy more shares of their stock, and the price they use for this is called the transaction price. It is also the price at which they will buy back shares from you if you decide to sell them. There is a small catch though. If you have not held onto your shares for at least a year, they might buy them back at 95% of that transaction price. So basically a 5% discount. Now let S get to the numbers. What is this transaction price for each type of share? As of the 30th of September 2025, it looks like all their share classes T, S, D, I, X, and JX are all priced identically at $9.81 per S share. This is the price that will be used for any investments made in October and for any shares bought back in September. This $9.81 is not just some random number. It is directly tied to the company S net asset value, or NAV, per S share. Think of NAV as the true underlying worth of the company's assets minus its debts, then divided by the number of shares. So it's a pretty solid indicator of what each share is truly worth. They have a whole process for figuring out this NAV, and it is overseen by a committee of independent directors. They have a valuation policy that lays out all the ways they calculate this, and it's all pretty detailed. The most up-to-date NAV is always available on their website, or you can call them Altus Group U. Incorporated, an independent valuation advisor, also reviews all these calculations to make sure everything is on the up and up. They even review the appraisals of all the company's properties once a year. Now let's look at the big picture of their assets and liabilities. As of the 30th of September 2025, their real estate investments were valued at a massive $5,647 million. And this is a pretty big jump from about $5,182 million back in August. That is a nice increase in what they own. They also have other assets bringing in another $669 million. On the flip side, they have debt and other liabilities which total around $3,482 million. When you crunch all these numbers, their net asset value, the NAV, comes out to be $2,833 million. And when you divide that NAV by the number of shares outstanding, which is about 289 million shares, you get that familiar $9.81 per S share. So the numbers really do add up. It's interesting to note that their total NAV stayed pretty much the same from August to September, even with a significant increase in real estate investments, suggesting other liabilities or assets moved around. So what are they investing in as of the 30th of September 2025? Hines Global owned interests in 52 real properties, and these properties are doing pretty well, with 96% of the space being leased. That's a really high occupancy rate, meaning their tenants are keeping their spaces filled. They have about 24 million square feet of space that can be leased out. Their portfolio is about 35% levered. This means that about 35% of the value of their real estate comes from debt. Now, borrowing money can amplify returns, but it also increases risk, especially if rents fall or property values drop. Let's talk about how they value these properties. They use things like exit capitalization rates and discount rates. The exit cap rate is like an estimate of the property S net operating income in the future, divided by its value at the time of sale. A lower cap rate generally means a higher property value. For their office properties, the exit cap rate is 6.93%, industrial is 5.56%, and residential is 5.43%. The discount rate or internal rate of return IR is what investors expect to earn on their investment. For office buildings, it is 8.15%, industrial is 7.20%, and residential is 6.99%. They generally expect to hold onto these properties for about 9 to 10 years. These rates are super important. If the exit capitalization rate drops by just 0.25%, it could increase the value of their real estate by about 3.04% on average. On the other hand, if the rate increases by 0.25%, that value could drop by about 2.75%. Similarly, a 0.25% decrease in the discount rate could boost property values by 1.94% on average, while an increase would bring them down. Basically, small changes in these rates can have a pretty big impact on the total value of their holdings. Now, let's talk about what you get as a shareholder. The board has approved distributions for October 2025. For most of their share classes, Class T, S, D, I, X, and JX, they are declaring a gross distribution of 5.2 cents per S-share. What you actually receive as a net distribution varies because of different fees. For example, Class T shares have a distribution and stockholder servicing fee of 0.8 cents, leaving a net of 4.4 cents. Class S has a fee of 0.7 cents, netting 4.5 cents. Class D has a much lower fee of 0.2 cents, giving you a net of 5 cents. And for Class I and Class AX/JX shares, there are no fees, so you get the full 5.2 cents net distribution. These net distributions will be paid in cash or reinvested into more shares if you are in their reinvestment plan. Importantly, these distributions might not always come from the actual cash generated by their operations. Sometimes companies might use other sources like borrowing money to make these payments, which can be a signal about their cash flow health. Looking at the bigger picture, Hines Global Income Trust Incorporated seems to be operating with a well-defined strategy. Their focus on stable, high-occupancy real estate, combined with a clear valuation process, suggests a commitment to transparency and managing investor expectations. The NAV per share, being the same across all classes for this period, shows a consistent valuation method being applied. The use of independent advisors like Altus Group US Incorporated lends credibility to their valuation figures and internal controls. However, like any real estate investment, they are exposed to market fluctuations. The sensitivity analysis on their property valuations highlights a key risk. Small shifts in interest rates or cap rates could materially impact their reported net asset value. From a shareholder's perspective, the distributions are declared, but the actual payout can fluctuate based on fees. The fact that distributions might be paid from sources other than operating cash flow is something to watch. While not necessarily a red flag on its own, it can be a sign of pressure on cash generation, especially if it becomes a consistent practice. In conclusion, Hines Global Income Trust Incorporated appears to be a stable real estate investment trust with solid occupancy rates and a diligent valuation process. The key risks lie in the inherent volatility of real estate markets and the impact of interest rate changes on their property values. Their strategy seems geared towards long-term income generation, but investors should remain aware of how they fund their distributions and the potential for NAV fluctuations due to market conditions. Alright, that is our breakdown of Hines Global Income Trust Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.